Hello and welcome to another episode of Frugal Finance. Today we're going to talk about my personal top 5 forms of passive income. By passive I mean stuff that you earn that you don't actively have to go to work for. So basically you go to work for your 9 to 5 job and you exchange your time for money. These are passive income. So basically you put energy in, some of them will require more than others and some require a little bit of tinkering with, but essentially they earn you money even when you are asleep. So without further ado, please subscribe, smash the like button, comment below, share the channel about. It really helps get us out to a wider audience. And with that said, let's get straight stuck into the video. So my top 5 forms of passive income. Number one item on the list that I personally love, and I think it's a great way for people to start right at the beginning with passive income and a side hustle, if you like, of some nature, and that is upcycling or selling on used goods. So going to your likes of Craigslist or eBay or Gumtree, that kind of thing, and finding items that you understand and you know about that you can purchase at a discounted price and then you can sell on and remarket at a higher price. So for example, when I was at university, I used to buy push bikes off the internet where they'd had pretty poor photographs taken, or maybe they've been left outside and got rusty and unloved, and I would take them away and I would refurbish them, and then I would take nice photographs of them and then I would sell them on eBay. And I might buy a bike for £25-30 and sell it for £80. Well, that was brilliant when I was a student, because that basically gave me some money so I could spend it down the pub on beer. Clearly I didn't choose to invest it in the stock market or do anything sensible with it, but I blew it on beer basically. But at least I wasn't racking up further debt, I suppose. So good win there. But basically the main benefit of that is that it is non-taxable income. So the money the profit you make, the money you make on, say in my example, buying and selling a bicycle for profit, I didn't pay tax on that. So that is an instant 20% saving, base rate taxpayer. So that is, in my opinion, a really good way, and I think anybody can do that. You can start with very little money and build yourself up. And I sort of built a reserve pot, so I would put £100 in to start with to buy a couple of push bikes, and I'd sell them for £150, but I would keep that £150 in there so that I could buy more and try and expand that. And I think I grew that to about £900 worth of kind of profit, if you like, in my PayPal account at the time, which did really help, to be fair. You know, that paid for a lot of beer, a lot of also transportation costs and other expenses at university. So yeah, that was very useful. So my second form of passive income is sweet interest and growth, compound interest. So whether that would be putting your money in the stock market, in an ISA or a long cash ISA or a long-term high interest savings account, those kind of things. So anything you can do to get your money to work for you. So you put £1,000 in, and let's say you get 10% in the stock market, you're going to get £100 for nothing. So that's just under a tenner a month for holding £1,000. Now I know your barrier to entry is a bit higher than say your eBay thing, but I'll give you the example of, I had nearly £1,000 of profit in my eBay account. I could have taken that money, put it into a cash ISA, giving me say 4% back in the day when I was at uni. Obviously it's a lot lower now, but put it in there, and that would have given me say £40 a year. That's £40 a year I don't have to do anything with. I don't have to do anything for that. And in reality, I probably did waste that £1,000. So I would have been much better off putting it in there and letting it grow. And the benefit, massive benefit of compound interest, is that it works in the opposite direction to when you get a credit card out. So I have £1,000, let's say it's 5% interest, so I get £50 a year on my £1,000. Next year, I get 5% on my £1,050. So actually, I get £52.50. So I've actually earned money on the money that I earned, money on the money that I earned, money on the money that I earned. And as per numerous other videos, credit cards work in the opposite way. So the interest they charge you, they then charge you on the cost of the interest. So it's compounded the other way, so the down way, as opposed to the up way. So that's a real favourite of mine, because I think if you've got money and your emergency fund, or you've got savings or whatever, you've got investments, it's a really good way of getting those returns back. And obviously things like the stock market and so on, if you're invested in individual shares, which gives me a good link to the Trading 212 link below. If you want to have up to £100 worth of free stocks, free money essentially, up to £100, please do sign down below. There's a link in the description for both Trading 212 and Freetrade. You need to check the accounts out. One does charge for holding an ISA, the other one doesn't. But the one that charges gives you up to £200. So if you were to open an account with both of them, for example, not that that's the most tax efficient way to do things, but if you wanted to, you could get up to £300 in a free stock. So please do check out the link in the description if you're considering that. But obviously there's a massive bonus of being invested in individual companies, and the stock market is that you get dividend payments. They are payments from the profits of the company. So that goes into your pile. So let's say you had £1,000 in the stock market, goes up 5%. They also give you a 5% dividend payout. We've just made 100 quid. So that is a real favourite for me in terms of a passive income form. So the next one would be doing a course. So for example, if you have specialist knowledge in cooking, or perhaps property, or you can teach a language, all that kind of stuff, you could spend the time making a course for people to sign up on. And once you've made that course, people will come and sign and download, and they will remain a member or pay a one-off fee, whatever structure you need to go for. And that is a really good way of having passive income. Obviously you need to feed it a bit of advertising and maybe tinker with it, depending on what particular specialist thing you have. Like if you had law, for instance, or something to do with law, that I would imagine has a high involvement rate, because you've got to keep on top of it and change it. Whereas if you have something like languages, obviously apart from maybe going and tinkering with the odd thing, teaching people a language, I would imagine, is relatively static in terms of continuous tinkering with the course that you've set up. But obviously they are a brilliant way of getting people to sign up for a course of some nature, and then obviously they pay you a fee for doing that. So it's a one-time effort, and then you get repeat business. So that's a really good method. So on to my favourite form of passive income. As you probably would have seen from the other videos, I'm quite heavily involved with property, real estate, whatever you want to call it. So generally buy to let. So purchasing a property with the intention of renting it to someone, they pay a rent to you, which is generally speaking higher than the mortgage, hopefully it is, and then you end up with a profit at the end of it after you've hit your expenses. Your profit might be 10%, 20, 30, who knows, depends on what kind of mortgage you've got and what kind of deal you've done, and also what kind of capital you've put in. Ideally, you put money in, you refinance it once you've refurbished it, and then you pull your money back out. So you have put effectively no money in. So let's say you buy £100,000 property, you put in £25,000 and then do it all up, so you spend 10 grand on it, and now it's worth £150,000. You remortgage that, you pull out your money, and then hopefully you've got, relatively speaking, no money left in the deal. You've still got your money that you put in, your 25 grand plus maybe your 10. You might not have got all of it back, but you've got, say, the lion's share of it back, and you've got that money sat in a bank account, and you're ready to go and do the same thing on another property. So you've got no money invested in that property. So everything that comes in is purely passive income. So if the tenant's paying you £500 rent and your mortgage is £250 minus, say, costs of a letting agent and the rest of it, you might be clearing £150 a month. So £150 a month, which you have to do, relatively speaking, very little for, especially if you've got a managing agent in to manage the property. Obviously they will take care of everything. Obviously they're still going to phone you and ask you questions if the expenses are big, and there might be void periods and things like that. But generally speaking, you are going to get some form of passive income from that property over a long period of time. And then obviously there's capital growth in the property as well, which is less guaranteed, but historically properties do go up in price. So you're going to build your overall wealth as well. So the final thing would be a YouTube or some kind of vlogging, internet-based thing on a topic that you enjoy, and see if you can turn that into a monetization. So obviously, getting to monetization on YouTube or for a vlog or Instagram or that kind of thing. Or if you can capitalize on your new audience and try and drive them to, say, your books, for example, or your courses that you've written, or maybe find some deals or gain further information about some topics that you're interested in by talking about them and repeating them. So it's not always just about reaching the kind of monetization levels quickly. It's about kind of doing something that you're passionate about and seeing if you can feed off the fuel of that to feed into your other passive incomes. You may not have the time to do 2 or 3 YouTube videos a week and feed it. It's very time hungry. But if you can actually use some other social media outlets to drive traffic towards whatever it is you need in terms of knowledge or perhaps course sales, that kind of thing, then I think that any form of social media is a passive income of sorts, because it is channeling your structure into a certain place, and you're gathering up audiences from other places. Obviously these things are not entirely passive. They do require some feeding into and the rest of it, but in essence, people are gonna, you say you make a YouTube video, once it's made, this video for example will go up on my channel and it will stay there for the duration of as long as this account is open, forevermore basically. So I've made this video, it's a one-time event and that's it, and then people will watch it, and then hopefully people will see the videos, they'll click on the other videos, it might get to monetization levels for YouTube, and then I can reinvest some of the money back into the channel, or it might drive people to my main company's website, charlescotts.co.uk. We do leasehold management, so they may pick up on that. And also I found that some of the videos I've done, I tie in with some of the training courses I've done. So if you look through the descriptions, you will see ones about Section 20 Landlord and Tenant Act, which is to do with leasehold property, which is what we specialise in here at Charles Cox. That's been quite useful, because I've been able to steer people to my YouTube channel when they've asked me questions, and I've said, well, watch the video I've done on it, and that will explain what Section 20 is. So it's a useful tool to drive traffic around social media. So less of a passive income, I suppose, but a tool that you can use to lead to passive income. So I hope you really liked the video, and you found some useful tips in there, and please do comment below and share other ways of passive income. I'm all for that. If you've got any other ideas, please do comment below and let me know what they are. I'm quite happy to talk about them, give my pros and cons to them if need be. And without further ado, please do check out the links in the description below. Please subscribe to the channel, it really does help. I'm quite astounded, we've grown a reasonable amount in the last month or so, and we're getting nice level of comments, so let's keep that up and try and grow the channel. So if you're watching this for the first time, please do subscribe. I tend to post videos as much as I can daily. Obviously it's not a kind of golden rule that I'm posting daily, but I will post as much as I possibly can. I do enjoy talking about these kind of topics, so I cover everything from property, developments, general news and knowledge, debt, personal finance, stock markets, ISAs, investments, all that kind of stuff, everything to do with finance and personal wealth, and how to be frugal about them and how to kind of save money. You'll see in the descriptions below there are obviously two companies. One charges £3 a month if you want to hold an ISA with them in the stock market, the other one's free. I suggest you go with the free one, even though they give slightly less share. I don't like the thought of paying £3 a month for an ISA, which I can get somewhere for free. So yes, they're giving away a lesser priced share, but I think over a long period of time that's going to become irrelevant. I do like the platform on the other one, so I do wish that they would actually reduce that £3 or delete it essentially, but who knows, maybe if they're listening they might do that. So with that said, I'll see you next time.